Deuteronomy chapter 20, verse 4. For the Lord your God is he who goes with you to fight for you against your enemies, to give you the victory. Isaiah chapter 40, verse 29. He gives power to the faint, and to him who has no might he increases strength. Isaiah chapter 12, verse 2. Behold, God is my salvation. I will trust and will not be afraid. For the Lord God is my strength and my song, and he has become my salvation. James chapter 1, verse 12. Blessed is the man who remains steadfast under trial, for when he has stood the test, he will receive the crown of life, which God has promised to those who love him.
Yo, what's up, everybody? What's up, what's up, what's up? Hope everyone's doing well. So yeah, we're trying this again, the whole 4K thing. So let me know if you could see everything okay. Looks good on my end. So yeah, let me know if you could see all the small writing, all the letters. Does everything sound okay? Just give me that confirmation real quick. Perfect. All right. Beautiful. I do kind of see that there's a lag going on. I think it's my internet today. Doesn't have full bars, but you know, it's kind of the way it is, I guess. So yeah, let me just double check some stuff. All right, so as always, the whole idea of what we're going to do today, we're going to talk about, you know, why this stuff is so effective, right? Why this strategy works, why our bias and narrative ideas work, which I'm sure a lot of you guys already know. But for those of you that may be new, you're going to see why this stuff works. And next year, it's going to be the same thing, right? Nothing changes just because a new year comes. Everything still works. Everything's going to keep working unless they take the markets away from us entirely. So yeah, of course, we're going to start with the news, talk about Power 3 a little bit. Then we're going to go bonds, yields, DXY, the other currencies, and then the indices. And if you guys want to get into gold or, you know, any other asset, you know, we can do that. We're also going to obviously, throughout the call, answer questions. And then later today, I will, you know, drop a solely analysis-based video as I did last week. Okay. So yeah, if we look at what's going on this week, we have OPEC. If you guys don't know, OPEC is the oil and gas like situation, I guess. I don't really know like everything about it, but OPEC here, but I think we could pull this up. Yeah, the 12 or 11 oil-rich nations. Okay, so they're going to have conversations about, obviously, energy, many different things. It's not necessarily something to be too concerned about, but, you know, it's something we definitely have to be aware of. That's for sure. Sunday, we don't even trade anyway. Next week is NFP week, I believe. Yep, NFP week. NFP Wednesday. So most of the trading that we're going to do is going to be on Tuesday or Monday and Tuesday. And then beyond that, we're going to have to be pretty cautious because, it's just kind of the way it is. Unless you want to go out there, gunsling and over leverage and blow your account, you don't have to take my advice or ICT's advice. But if you're going to be a responsible business owner, influenced trader, you're going to know that certain things, like certain conditions, we have to behave in a certain type of way. Doesn't mean you're scared of it, right? If you do want to trade the NFP day or the rest of the week, obviously there's a way to do that. You wait for the next hour after the release comes out, and then based on the liquidity mapping principles that I talk about, identify what's available. What's a previous hourly high and low? What's a previous 4-hour high and low? What's a previous session high and low? Is there a previous day or week or month high or low that is in close proximity to where price expands to? Did the expansion on the NFP announcement run into a higher time frame PD array or take a significant liquidity pool? In that case, you may see the smash lower or smash higher result in some kind of reversal, right? So there's lots of conditions, right? You obviously can't get into every single condition and every single scenario in one video. Nobody can do that. But what I just mentioned are some different scenarios that you could watch for. You want to think of weekly profiles, right? So NFP week could for sure set up the first 2 days in consolidation. Obviously, we'll get into more detail about this when we get to the chart. But I just want you guys to think about what this news event could potentially bring us. And generally, if it's leading up to that time, if you were smart money and you knew that something that comes out is going to be very dynamic, and everyone's going to be chasing price, right? Building liquidity up to that point, basically holding price in a holding pattern of some kind, maybe like a consolidation or seek and destroy, would probably be one of the better decisions to make. Because then when you rip price in that intended direction, you're going to have a lot of victims, especially if you whip it back and forth, which is a lot of times what happens during this week. So this is like a week that the odds are stacked against you. But if you have more experience and you've been listening to the stuff that I talk about, you're a diligent studier when it comes to ICT's concepts or ICT's concepts and my concepts, or not my concepts, but my different tools that I use within the ICT world. If you're experienced with them and you know what you're doing and you know a loss isn't going to wreck you and you know your mindset's secure because you've built it over years, and you're disciplined and you will not overtrade or over leverage, then, if you're confident enough, maybe you could consider, possibly participating, right? And of course, this ain't financial advice. I'm not a financial advisor. Hopefully you read the disclaimer. I'm not here to put you in trades. I'm not here to entice you to take trades, because I'm not legally authorized to give trade advice. But again, this is just my opinion, obviously. And, you do what you will with the information you receive. And this year's been pretty spectacular. But again, I don't want to, entice you into thinking that, NFP is a day or a week to trade. It's definitely something that you have to keep tabs on and pull back a lot of times. And if you do engage, anything after the NFP announcement, part of my rules that I try to tell everyone to follow when it comes to this, the first 2 days you can kind of trade as if it's somewhat normal, depending on if it's stuck in consolidation. If you identify that we're going sideways and it's not interested in doing anything, you might as well just give yourself one bullet in the chamber. One bullet. And if you miss it, right, and if it doesn't work out, on to the next day. And the next day you should be at half risk. Because it's all about preserving capital. And if you spent like the last month, right, or the last year being absolutely unbelievably profitable, why would you go into the end of the year, of all moments of the year, and overtrade, over leverage, break your rules, push too hard? Christmas is coming, I understand. Those of you that are profitable, those of you that have been here for a while, that know what you're doing, I get it, right? Wouldn't we all love to make $20,000 this month, right? Wouldn't that be just amazing? Because then you can buy everyone presents, you can go on vacation, you can do whatever the hell you want. But if you think that way, it's going to entice you. We're in one of the more harder to trade portions of the year. There's a reason that every year ICT takes 3 months off, from November, the second week of November, to the second week of February. There's a purpose, a rhyme and reason why he does that. And if you're going to go outside of the wisdom that's shared, right, outside of the information and tactics that he shares in terms of when you should engage normally or when you should pull back, you're going to face the consequences potentially. Again, if you know what you're doing, this isn't directed at you, right? This is directed at those of you that may be still learning. Why put yourself in a position where hypothetical bombs are blowing up right in the market and price is doing sometimes whatever the hell it wants? If you can't even really solidify something in a good condition, why push yourself and give yourself unrealistic expectations around a time like this, right? Why do it? You might as well use the month to study more than you look to participate, especially if you're just learning, okay? But again, if you know what you're doing, like if you're in my private group and you've been with me for a long time at this point, as long as you follow the rules, as long as you're disciplined and you don't care about losses, because you're disciplined and you trust yourself, then, it's a different story. You could do whatever you want, right? And you'll know that you'll make it back even if you do encounter a loss. But the risk of the invisible hand coming out and pushing price 100 points in 5 seconds, the risk is absolutely there, especially during this time. You think you're the only ones that want to go on vacation and buy your family all this and do that? Smart money wants to do that too. And we're food to them, okay? If we come in here thinking that every condition is something to bet the farm on, So just think about it. We're in an ocean filled with sharks, some of the brightest minds, and also on the flip side, some of the most evil people, are inside this industry. So you want to make sure you're aware of the risks. Again, that's not to scare you. That's to set reality in your mindset. Because I could sit here and tell you, yeah, guys, let's go bet, everything on NFP and catch the 150 point move or however much it runs in 5 seconds. Let's do it. Yeah. Like I could push you into that like some influencers do. Some live stream on NFP to take the NFP reaction, which is pretty incredible. Sometimes it's good, but a lot of times they're literally on live down thousands of dollars when they didn't have to do that, just to try to impress people that they'll never even meet, or people that are just, not even look at them. Once they take the loss, they're out and then they're blaming them, so it's just nonsense. Okay. So again, it's NFP. So a lot of the action, in my opinion, because there's more of a heavy news portion of the schedule happening later on in the week, we may see some obvious volatility during NFP. Something to keep in mind, though, also given the news that we see here and how it's structured, we have 5:15 NFP announcement, but then what do you see later on after the open at 7 o'clock? Right? We see PMI. Okay, so depending on the response we get at 5:15 a.m. Pacific Standard Time on this day, as a result of NFP, we're going to have to obviously gauge whether that was something or is something that could be seen as the real move. Most of the time when they're split like this, the NFP response is very slow. And then it leads up, right? More news events come out, the little, itty bitty news events. And they may hold it until the 7 a.m. time, right? Remember, 7 a.m., that's within a macro, right? 6:50 is, part of that macro. So 6:45, there's a news event that comes out, a small thing that has to do with PMI. So again, all of this may be set up to fake out here, maybe lag the whole entire first part of the week, even up into this, because that'll build more anticipation, more sentiment, more liquidity. And then maybe they just let loose when the 7 o'clock news, AM Pacific Standard Time, comes out on this day. All right, so that's something that we got to keep in mind. I have that in my notes already before I even hopped on. This is stuff that I note on a piece of paper going into the week, or in my journal on Discord, or wherever you journal. These are some things that you want to do for your weekly prep. All right, everything that I'm saying pretty much is written down for me personally, or some of it's just in my head because I've done this so much. I've done it for years, and the same stuff seems to happen over and over and over repetitively. So yeah, we're gonna look to see if there's anything we can engage. Obviously, Monday, Tuesday. Remember, Sunday, Monday, consolidation, manipulation. Tuesday, Wednesday, generally expansion. It's pretty ironic that it's lined up on Wednesday to have NFP on a day that there's supposed to be expansion generally if we're trending. And then Thursday, Friday, if we're accelerating at the start of the week pretty aggressively, and then we hit a higher time frame liquidity pool, or we hit a PD array, like a different PD array. Highs and lows are PD arrays, but if it hits a different PD array potentially going into one of these days, we want to gauge whether TGIF is going to kick in line as well, and then reach back 20 to 30, sometimes 35% of the range created from Wednesday, Tuesday, Monday, or Sunday, Monday, Tuesday, Wednesday. I don't know why I just said it backwards. Before we get started, I do want to remind you guys, if you could like the video, subscribe to the channel if you appreciate the content, if you've learned a lot this year, if you enjoy spending time on these calls with me and you get value from them. It's definitely a free way to show me that you do appreciate this content and that I should keep doing it, because I used to just be in my private group, and I want to help more people. So if that's something you guys feel inclined to do, I would very much appreciate it. Because it pushes the channel out, shows YouTube that we have something worth listening to, right? So, see, that's my view on the news today, or for this week. So here, let me actually, because of stuff that we dealt with the CME closing, definitely never going to forget to take a screenshot of the freaking news. That was nonsense. Right, so let's get this all set up real quick. Right, so yeah, it was a thing I was talking to my private group about. Yeah, so let's start with the bonds and yields. First, let's look at the yields. There it is, okay. So yeah, as you guys know, the yields pretty much influence or have a heavy-handed effect on what the DXY does. It has the reverse effect on the indices and the foreign currencies. Okay, so if this goes lower and we fail to get up here, remember long ago we talked about this as a balanced price range. We also mentioned that this low to this high was a balanced price range, but then we also talked about how if we get down below this low to that high, all of that range becomes a balanced price range. So it's pretty interesting and kind of like, in line with everything so far, because this high hasn't been broken. It pretty much makes sense how this could still continue to go lower. Why it's continuing to hold here? Because it has not broken through the levels of invalidation. So the sell side delivery, although this was a pretty deep retracement, it just simply looks like it's literally just that, a retracement to go lower. We shifted market structure here. We have a double change in state of delivery, breakdown here. Another order block was formed, and we broke down here. So now we're still staying inside of the validation portion of things relative to this price structure on this higher time frame, right? So the shift, the only way that I'm going to consider this going higher and being interested in being bullish, like I said, over the last couple weeks, we've been watching this drop, or it's been a decent amount of weeks, 1, 2, 3, 4, 5. Almost like 10 weeks. Pretty interesting that it's spent time inside this. But because we haven't broken through this and inverted it, because we haven't broken above this high, because it hasn't really broke through these down wicks that once they were traded through became balanced price range areas, because that has not been violated, we're going to still think that the high up here is going to hold price lower, unless we lose this high here, which would also, together blow this high out as well. I will be still considering that this will potentially look to maybe try to come down into this level. We are kind of trapped between the balanced price range above this high, all this price delivery that broke down, and the balanced price range below here, which is basically inside this order block. So we're kind of stuck, trapped in between this little box of price action here. See, so from this candle here to that there. I mean, we could obviously encapsulate the wicks, but we'll just use the bodies here. It just simply seems like it's stuck in between this. We have this low, high, lower low. So we also have this down candle here. It seems to be respecting price. As we look with our X-ray goggles of what's going on, we can kind of see what's happening here. Okay, and again, if it breaks down below this, if we move up to the 2-week chart, we actually have a bearish order block here. So up close candles are now respecting price, right? This up close candle, once it got traded through, came back, respected the 50% of it. Then we broke down, shifting market structure, created another order block, broke down below it again aggressively, and now there's multiple failed attempts to try to get above the high up there, and also to get outside of this this order block level here. Okay, so with that being said, unless that is terminated, I'm not going to be overwhelmingly bullish on this asset. So what does that mean? That means that the Christmas rally, at least if this continues to hold on, the Christmas rally for the indices is still going to potentially unfold. Black Friday had record-breaking sales, so companies are doing very well. Even in this economy that seemed to be teetering for a little while, things, they're definitely starting to look up, hopefully. And next year, I believe, is when we're going to all, in the U.S., really feel these policies. Because when you break something in the government, it takes time when you implement new stuff. It's not instant fixes for anything, unless you're giving money out, which makes inflation worse. So all that stuff on the back end definitely has an impact on what it is that we think about price, and what it could potentially be doing, and whether something is trustworthy or not. This continuing to drop supports continued buy side in the indices, buy side in the foreign currencies, and downside in the DXY. And that's, at least for now, what I'm assuming. And when we get into the indices, I'm going to talk about what we had to basically do, and what I talked about last week as a contingency plan, and how we would have operated with it, because we definitely did that and got in line with things and had a pretty solid week last week, which has generally been the case. So yeah, I guess all I have to really say about this, we took out the monthly high here. That was from, is that October's high? Let me see. Yeah, so that was October's high in here. And price basically peaked above it slightly, but we could see if we move up in time frame, I think we have, no, I guess not. You see how all these gaps, or there's like no gaps in there? It's all kind of efficiently traded. There's no fair value gap overlapping here. So it's very efficiently being delivered on these upper time frames. So yeah, we also have this 3-week order block there. If we go to the monthly chart, we see that there's an order block here. We're basically below that. It's also a monthly inversion fair value gap I talked about over the last couple of weeks. I said if we get down below that, it's starting to really amplify how they don't want to go higher. We see this wick up here, basically respected this low to that high. If we take this high to this low, given the fact that it's a failure swing, it's also a mitigation block if you want to look at it that way. Actually, no, I'll take that back. It definitely looks, it's more of a breaker, and then the overlap of the monthly fair value gap. So yeah, these levels in here, like I mentioned, we also have the breaker here. All this stuff is holding price, and it's the reason that this came up here and has rejected after it shifted market structure and gave us this retracement. Right, we've got an order block, a breaker, monthly fair value gap, failure to break above this high, balanced price range above us. Unless it violates that stuff, what is the purpose in forcing buy positions after a shift in market structure? It's not ready yet. If this was the 5 minute and this is what it was doing, you know, I mean, it wouldn't be overwhelmingly exciting until we got a displacement that inverts this fair value gap. Obviously, depending on what your model is, but you know, hopefully some of this stuff brings you some clarity as far as what we're looking at here. Do you guys have any questions before I move on? Because this is pretty much all I'm going to have mentioned about this asset, and then we'll move on to more things. All right, appreciate you, Fritz. Sorry, there is kind of a lag. I think about 10 seconds or so. So sorry about that. Yeah, it's in a consolidation, right? If you see the prices from one high to a low, right? That's the range right there, right? So high to low, we're pretty much at equilibrium relative to this high to that low. So it's kind of stuck, right? So and we have levels above us that are holding, but then we also have this weekly bullish order block that's also holding price. So again, we're going to have to just see which side's going to give up. And my opinion, given the fact that this failed and I'm expecting potentially continued bullishness on the indices because, you know, things are generally going to do well towards the end of the year because people like to spend money in the U.S. So yeah, we're to answer your question simply, we are in a holding pattern. And so we'll see. It's going to have to break out of this range, get away from this equilibrium, react to either this weekly bullish order block and displace above this, which changes the overall dynamic, right? We're going to end up seeking the trend line liquidity. Or, you know, what I'm really behind is seeing this hold because of balanced price range and my assumption that we're likely going to see a bullish indices throughout the rest of the year because of the Christmas rally seasonally. Seasonality is heavy on the end of the year. So if that's going to be supported by the bonds and yields, this needs to drop. So as long as we stay below this, as long as we stay below this monthly fair value gap, this weekly fair value gap, this breaker I just outlined for you, well, I outlined it a while ago, like a week or two ago. But now it's even more relevant because we definitely dug lower below it. So it's triggered in and it's active. So if we break above this high, think about all the stuff that gets taken out and starts to support us going higher. The fair value gaps, right? From monthly, weekly, daily too, right? There's gaps in here as well. We have swing highs being taken that could be classified as a shift in market structure back to the buy side. If it gets up above this level, we're breaking through all of that, turning these to inversion levels unless it gets back down below them. And then, you know, it may act as support in here and then try to push us up here. This breaker candle becomes an inversion. So that'd be another level to justify price holding there and going higher if it did get up here. And then we'd also be really contesting breaking through previous balanced price ranges that were beautifully respected up to that point, right? So yeah. So as long as that stuff stays intact, my opinion is we're going to keep going lower. We have an order block here. So we'll see. First line of the sand, first indication that we may not hold there is breaking through this order block. And again, just a reminder for those of you that may be new, or just those of you that may need a reminder, the first liquidity pools that we identify are the highs and lows on the current candle and in the previous candle. And then any candle that's in close proximity that could reasonably be reached to with the next candle, right? And it's the same thing when you go to the weekly chart, right? The current high, current low, previous high, previous low, and anything that's in close proximity in terms of lows, because we trade on the lower time frames. So these things are close proximity. So that's what's truly important right now. And then, of course, PD arrays, like I have highlighted here, that may act as support or resistance, influencing price delivery to one of the levels, one of those highs and lows that I mentioned, right? And then, of course, if there's a PD array that could be targeted in the grand scheme of things, definitely want to keep that noted. I have the lows down here noted just in case we break through this, especially if we break through this, because that triggers in another change in state of delivery and just gives up the ghost on anything that has to do with buy-side delivery, which is what I prefer to see if we're going to see DXY go lower and see the indices go higher. So in the grand scheme of things, right, near term, longer term, intermediate term, okay? So yeah, and because this traded into the gap in here, this high can be classified as an intermediate term high. If we go to the daily chart, that becomes even more apparent. Okay, so this high is significant, right? So that, and you can see that it's failing. It's setting up liquidity in there. But again, the only way I'm going to be interested in going up there, given the structure, is if we can invert these levels, stay above them, and then break through the order block that I just mentioned. And again, previous week's high is up here, right? Well, the week that just passed, the high is right here, and then the week prior to that, high is up here. That's all before we target anything above these highs up here. You know, same thing with stuff down here, right? We have a weekly low here. If you zoom in, weekly low, the indicator I have here that I tell you guys to get, right? The suite of indicators, obviously, you know, it has a lot of things like this, but this specifically, it's highlighting Saturday and Sunday. So every gray line, that's the start of a week, right? So in between those are your highs and lows for the week. And then, of course, previous days and stuff related to that. So if it comes up here, hits this, and then declines, right? We have relative equal lows there. So that's a previous week's low. Previous week's low is also down here, right? After we, you know, close through this and get below the breaker, what targets do we have? We have the gap here. It was a previous balanced price range, high, low, high. So order block, overlapping fair value gap. So sell side, buy side offered. So breaking through that as we get down to the low, if it continues to do that, then obviously you see why that is a likely scenario to target down here. And you don't have to think, oh, it's going to go higher. No, there's things behind us stacked on top of one another that should have already held. But because they're not, you know, we have to just go with what the market's telling us. It doesn't matter what you think. It doesn't matter what I think. It doesn't matter what ICT thinks. What truly matters is what the market's telling us. Our interpretation of the language is what matters. And it has to be correct, or the result is you lose money. If you're trading live, which I don't encourage you to do because I'm not a financial advisor and I can't do that. But, you know, you'll do what you will with the information and what you see me do and what you see my students do. Like Mike in the chat, right? Who else is in the chat that is part of my private group? Nico, Tony, Fritz, you guys are on YouTube. But yeah, you know, so let me read some questions. 5-year, 10-year has previous months low, a lot closer than 30-year. On a weekly, we're in suspension block on the weekly. For this asset, let me go double check for you. Are you talking about this here? I don't know if I like that, honestly. It's too large. It's too sporadic. I mean, you could encapsulate the whole range, but you want to keep tabs on every piece of it, right? Because the wicks too, the wicks all have quadrants. It's a nasty range in there, right? So you want to keep that in mind. Those levels are going to be sensitive, obviously. If you don't look at it as a suspension block, that's not something you want to use. You still have volume imbalances here, volume imbalance. These are new week opening gaps, right? New week opening gap, new week opening gap. Right, so anything that you see, I mean, this is a new week opening gap down here too. So we have a lot of gaps that we got to make sure we're aware of But all the PD arrays, if you wanted to keep it very simple and not even look at the new week opening gaps I just highlighted, you could literally just look at the PD arrays the way that I have them structured, and you have literally a skeleton framework of significant price levels that should respond aggressively or get inverted and then confirm to go the other way. And then you could seek equal highs up here, which are very obvious if that happens. So we have price cornered at the moment for this asset. Who said it was in a holding pattern? I think it was Mike. Yeah, Mike said we're in a holding pattern. That's absolutely true. Right? So again, we got to observe the reaction that's going to happen around these levels. All right? So hopefully everything makes sense. I do agree that that could be significant, but I just want to widen your view on it. All these different levels that you see on that weekly chart, separating them into like volume imbalance levels, right? The low here, or the lower portion of the body here, the higher portion here, upper portion here, lower portion here, and then the quadrants within that. Those are all significant. And then all the wicks. I mean, you could, if you wanted to simplify everything and not use the gaps like that, you could just take the biggest wick here, which is here, and then kind of just observe this and see how price is going to respond to that. Because once we're outside of that, I don't think it's going to come back. This wick in here, what does the wick offer when it goes down and goes up again and closes like this? What is it offering? Buy side or sell side? Or a third option? Good job, Mike. Yeah, you like that trick question? But yeah, you're absolutely right. It's both sides. So if it leaves this, which it has, if we close below that, it's a lot more. It makes me a lot more confident that we're going to get through it, right? So yeah, if it trades back through that, again, we have that order block on the daily chart we looked at, right? But we also have this wick on this time frame. So trading beyond the 50% of this wick here will be a problem, right? And of course, if it gets above this monthly fair value gap again, I mean, we're back to the upper portion, and this monthly level is going to be dynamic. Yes, you're absolutely right, Fritz. Good job. Good job, Fritz. So yeah, hopefully all this makes sense at this point. It's about all I'm going to really talk about in terms of this asset. It's pretty much all the important pieces that I have looked at. Let me actually make this the proper color so I don't get confused. So you don't get confused too. Right, and then of course we have the monthly wick down there too. If we go to the monthly chart, I have this wick outlined as well. Actually pull that over to the wick so we can have some room for the weekly wick. Again, I highly advise you guys to color code your tools. You know, don't just have them one color. Some people's opinion says it looks messy, but hey, I mean, that's your opinion. You're entitled to it. But when I'm executing, obviously I have a clean chart because I want to be able to see price and not be distracted. But at the same time, when you're doing analysis, you want to be as detailed and visual as possible, especially if you're just learning. And for those of you that are just learning, that's why I have all this stuff shown, because I could easily just go in there with a naked chart and point things out and say, this is what I believe. But I mean, who's that really helping, you or me? You know, because I can only see my vision through my eyes, and I try to get you guys to see what I'm seeing and what I'm thinking about through the annotations. So sometimes it's busy, but you know, if there's any questions you have about any pieces that you know are on this busy chart, just let me know and we could slow down and I could look at it, point it out, and tell you exactly what it is so you can write it down if you don't like having a busy chart. Just because I'm doing it like this and it's so visual doesn't mean you have to have it visual. When I'm executing, generally the chart I'm using doesn't have any of this. That's why I have a clean chart template, right? So it's good to have like a skeleton template, right? Something that, or not a skeleton, but like a detailed template and then have one that's empty eventually. But as you're learning, you don't want to have empty charts because you're going to miss something because you're not visually or optically trained yet, right? Like you don't see things pop off the chart yet. So this is how you get stuff to start popping off the chart at you, because then you'll just visualize it. And the more times that you do this type of stuff, the more detailed you are, the more it sticks to your subconscious, and your reticular activating system kicks on when you have enough experience. And that's the thing that, mentors can't teach. The only way that they could get you to borrow their experience and try to speed you along through the process in terms of pattern recognition and what's important is by doing stuff like this, visually pulling out what they're talking about, what they're seeing, rather than just talking about it on a clean chart, because people don't like a busy chart, So yeah, so again, hopefully this makes sense. We're gonna obviously have to see what this is gonna do. Let me just put a note real quick and send it to the private group. The hell won't it move? And we're going to turn this red. Okay, so then again, the perspective's going to be come on, stupid thing. Wait, I could put a GIF? No freaking way. There's no way. Oh yeah, no, I didn't think so. I was like, wait, I could put fun little GIFs on the chart? What? Yeah, no. Do you guys like this finger, or you like the arrow better? What do you guys think? Hey, what's up, Chowezi? Yeah, what do you guys prefer? I'm thinking the up arrow, huh? Just looks a little bit more clear. So yeah, because it's in a holding pattern, like Mike pointed out, we're going to have to obviously wait. And then, of course, like I said, the breaker in here. I guess we'll just keep the colors the way that the way that they are normally. All right. Maybe I could go like this, make it even more. Put it on the top. Yeah, we'll just keep it like that. Yeah, Nico, see, you like the arrow too? Yeah, I think we'll just keep it with the arrow. So yeah, this is what we're going to be watching here, okay? And then, of course, like I said, the weekly wick We also have the breaker in here. So we want to make sure we're watching what the response is going to be from that. And if we get above that, again, we're getting above numerous levels. Remember our 3 PDA rule for validation. If it invalidates, which that's what would happen if it was to take this high, that's the third level of PD array in this price leg that we'd have to watch, aside from like this monthly fair value gap, right? So because that didn't get taken out and we've displaced lower, changes state of delivery again, back to the downside after failing to breach the balanced price range up here that we literally used to forecast this going lower into this weekly bullish order block. Because that's still intact and this stuff has happened and we're back down below here, we're going to have to see what happens. And again, if this high gets taken, we have what's called the type 2 dealing range reversal, right? High, low, high, failure swing, break above this, should target up here or at minimum here if it takes us high, right? And then however it responds in here would either confirm that we're going to get up here or not confirm and then break down, maybe take this as a stop raid, you know, in the holding pattern and then just dump lower. So for now, we're going to just watch this specific area in here. And I mean, we could see on these other assets too, right? On the other variations of the same asset, right? We do have some equal highs up here. We do got equal highs up here. We are back below this weekly fair value gap. So again, same thing here. Only way we go higher is if we break up above this. That fully confirms that order flow may have shifted. And then if an order block forms and we take that, we are really confirming that we're now going to blow out some of these larger upper levels. And you could see from this high extreme to the low extreme, I think it's on a monthly time frame. Yeah. So the parent price swing, you could see we're right at equilibrium. What generally happens at equilibrium, you guys? Those of you that have been with me for a while. What is this proving yet again, characteristic-wise, about consolidation and equilibrium? Let me know in the chat. Or let everybody else know in the chat that may not know. Consolidation, exactly. So we got to break away from this 50% level. Low probability too, yeah, for sure. Until it breaks away. And that'll be the anchor point. You know, when it breaks away and gets outside of the consolidation, that at that time, it's going to almost always use this level as a starting point because that's fair value relative to the range. And, you know, there's a lot of complexities we can get into, but I'm not going to try to confuse y'all right now. But just know that when we're at equilibrium on a higher time frame, especially if it's on a monthly, weekly, or daily time frame, expect the lower time frame to potentially be a little bit more shaky. And so in that case, that's a moment where you drop your risk until we open up a little bit. All right, so yeah, that is the opinion. So let me post this real quick. All right, so yeah, with that being said, we'll move on now. So if the yields are looking to potentially drop, remember this fair value gap I've had your guys' attention on for literally at this point weeks, how that area was going to be significant. Well, look how significant it has been, how much it's proven to be significant. Now that we're back above that, what do we see? Equal highs, right? And then we got another high up here. We got another layer of equal highs. It's a monthly high, September's high. We have a monthly fair value gap, right? It's a sell side imbalance, right? Or a SIBI. And we came all the way back above it, right? And we talked about being bullish before any of this manifested. So we've called every market we touch, we have talked about, and it's went to our levels in the high 90% of the time. And again, it's all verified and recorded. And of course, I have private apprenticeship students here as well. And if I was lying, I do this every day with them. They would call me out. There's no reason for them to defend me if I'm lying. What would be the purpose? Why would they even be in my private group? You know, so just for those that may be new, you're in a place that you could trust what's going on. You know what I mean? So yeah, all of this was called, and we've continued to call it as it's stayed above these levels in here. So we're going to keep that as the focus, and it'll keep going higher, right? So as long as we don't break this low down here, as long as we don't dump off and break the 50% of this monthly fair value gap, I think we're going to continue to go higher. And what are the targets? Well, we have these highs up here. All right, so yeah, first target is obviously going to be here. And we could worry about the other targets a little bit later when more stuff happens. So yeah, if the yields are going to drop, we want to see how likely it's going to be for price to want to get up through some of this. Again, we're at this monthly bullish order block. We've been talking about this. We called this, like I said, and because it didn't break down below this low, because it didn't violate this order block entirely, because it didn't break through that weekly fair value gap, right, we've stayed beautifully in between the middle. Not too sure what this is. I think is that a wick? Two-week wick? No, I'm not too sure. I think that was measuring from this low. Yeah. Wait, no. Yeah, I don't know. I'm not necessarily sure what the hell that was. Right? What we can observe, though, is this low to that high, and we can get a rolling premium and discount observation. So we're at a discount in here. We were at a premium, right, relative to this low to that high, because that's the current range we're trading in. Obviously, that's inside this big range, this high to that low. We're kind of at a premium, 50% somewhere in here from this low to that high. But again, if the yields are going to drop, my anticipation is that this is going to hold. As long as this stuff holds, we'll be solid. If it breaks down below this, we'll have two changes of state of delivery, and we'll be all right to continue to go lower. Okay? Unless that happens, we're going to keep trying to see if this can go higher, especially because the Christmas rally, bullish seasonal tendency, it's highly influential towards the end of the year. It's one of those more sensitive seasonal tendencies that generally plays out, even on off years in a bearish trend. Christmas, the holidays and Christmas time, generally there's people spending money. People spending money is good for the economy, right? It's good for stocks. So good for companies. So yeah, we'll keep that in mind, okay? And then of course we got the monthly bullish order block. We have the weekly bullish order block here. And I wouldn't be surprised if we open up, maybe drop a little bit into this range a little bit, because it is the weekly bullish order block. We've already gotten two responses, so one tap into the monthly bullish order block, and then we got the second tap, and both have essentially pushed price back to the buy side. So again, we have the high up here, we have the previous week's high here, so that's my first target if we can get up there. We have the wick, we have this wick, this bigger wick, so all the quadrants in there are going to be significant. And again, if we could just displace and get through that for the coming week, that's all we'll really need to get involved with something if we were looking to trade this, right? Like if this was a NASDAQ, this is how I would think too, So yeah, with that being said, just kind of double check real quick. So yeah, we do have these lows down here. It is very interesting. We're in a holding pattern here too, sideways for weeks. After it, it's been gravitating bullish. But again, we're going to need something significant to turn off the bullishness. Okay. In this case, for the 10-year, it has to get below this fair value gap and break this, and that will signal that we're going to probably break this low. For this one, for the 30-year, I mean, even if we get close down here, it may still be sensitive because it's monthly bullish order block, but I don't want to see this high to that low get violated because we've taken buy stops, taken sell stops. So this should be able to act as an order block in there. See that? We didn't even have to switch to the time frame to know that that was potentially going to be an order block. So if we close below the 50% of this level here, that's enough for me to believe that it's probably going to target down here because we have that one change of state. And then we would have an invalidated order block here that may be just simply creating this as a bearish order block, low to high. And if we were to get down below this low to high, back down to the low, if price trades back into it, it would be looked at as a breaker. And the only way I'd be able to go bullish again is if that was to be given up and then just rampage to the buy side. All right, so yeah, then we got a quarterly high that was taken here, had that response, simply just to reach down to the higher time frame level in here. Structural integrity has not been fully invalidated, at least the way I look at things. So I'm going to just continue to push this to the buy side. That should help support us when we look at the indices if we try to make an argument that's going to be bullish, which I have, right? I made that assumption last week as we had that huge reversal. Okay. So yeah, this is my opinion on this asset. Hopefully all of that makes sense. Do you guys have any questions? Oh yeah, the interest rate cut. That makes me even more bullish on this asset and the indices and the foreign currencies, and bearish for the dollar. All right, Fritz said it makes sense, so I'll take your opinion on that. Just get these out to my group real quick. What is happening? I just want to throw this in there. If you guys do want to be a part of my private group, I don't have one-on-one availability open until next quarter because the 20th of November passed. But I do have just access to joining the community, being a part of the community, and being able to go live with me every single day. And then, of course, it's like this type of scenario every single day, pretty much, with a group. And then every quarter I have openings depending on where my students are at the time for one-on-one access. So those of you that maybe don't know, now you do. All the links for that and information for that is in the description, or you could just DM me on Instagram and we could talk about it. All right. So, and the testimonials for that are humbling, to say the least. So yeah, I guess that's all I have to say about this. So let's actually move to now the DXY. See if we can get this video done within 2 hours. Just there's so much to talk about, and I try to give you guys my all. So let's actually start here first. Get a bigger view, clean view. Okay, so the DXY is nasty, but what do you see in here? We see down close candle supporting price. We see wicks being respected. We see upper PD arrays getting violated, right? Like the wick here. There's really not much of a imbalance anywhere, right? So they've efficiently been trading DXY pretty nicely. Although, it's in some cases here and there it's been a little bit chaotic, but for the most part, price trading up into these levels is pretty much supporting continued buy side. We have the 50% of this wick, so we'll see what happens, right? We peaked above it, took the stops out. If we go to the monthly chart, it still could turn into just a retracement to go lower. This is in fact still a breaker, low, high, lower, low. So I do believe that, again, if the bonds are going to go higher and the yields are going to go lower, and there's a rate cut in December, And seasonality for the indices is bullish, like really bullish. I do believe that we'll eventually see this give up, especially if you see that this breaks down for the month of December. Maybe it opens up a little bit. We have a wick here that it's respected. So if it breaks down through the month of December and we close below this, the target is the low down here. And let's see on the quarterly time frame. That quarterly fair value gap, I talked about this a long time ago. I took it off the chart now, but I mean, you could still see that it just beautifully was used for months, right? As a target when we completed this market maker sell model, which again, I walked through this entire price leg, higher and lower, documented, right? I mean, it's one of those things that was spectacular this year. And then we, of course, picked the low of the year. And you can kind of see what happened here, right? The order block, 50%, respected it, declined, broke through the 50% of this, was in a market maker sell model, and low resistance liquidity run signature being the failure swing. Couple that with the fair value gap. So, you know, again, if this was like the 5-minute chart, I would be thinking the same thing. You know, if we broke down below this low here, I would be thinking, okay, we're probably going to keep going lower and target these lows here if this was the 5-minute chart. So maybe that's what's in the cards. You know, we'll see. It's a little bit intense. A lot can happen up to that point, but you know, just a reasonable observation. We did come up and tap into this monthly fair value gap too, so that's a good observation to have actually. Or it's not monthly, it's a quarterly fair value gap. Where's my quarterly markup? Here it is. This here is actually the gap. It's the volume imbalance in there. Sorry I don't have any music today too, because I got hit with a copyright. I was like, come on, bro. Really? Like, it's so dumb. I just got to get AI to make me a playlist that I could play. But yeah. Watch, they're going to start copywriting AI music too. Watch. The companies are like, I created the freaking AI, so you don't get to use anything because, you know, they have to make every penny. Can't just let up a little bit. It's sad, but whatever. Hopefully that don't happen. But yeah. So we can see the monthly wick. Like I said, it's beautifully respected. We got this volume imbalance as part of the context, right? It's a weekly volume imbalance. Right. So again, if price from this level, because we looked at it from such a higher time frame and we can kind of see what this has done, right? It's went literally into a monthly level. It's also, this high is literally the high that tapped into this quarterly high and quarterly bearish fair value gap and a quarterly bearish breaker, which again, that's a balanced price range up there, right? So price is holding in there. So we're going to see what happens. So because this is what has happened and we've reached into this level on this higher time frame, now when we drop down and we look at the current price action, the structure, if we were to see a displacement through this low, doesn't it make sense that this is probably going to keep going lower? right? Because we came off of a higher time frame, a really large higher time frame level that it tapped into. It doesn't do this all the time. It doesn't tap into quarterly levels every week. So generally it takes a whole quarter to get to a quarterly level. Sometimes it takes 2 or 3, depending on how large the range is. You know? So again, if it was to break this, right? Break this candle here, shift the market structure, we have a run on stops, we have a higher time frame PD array, we may end up seeing this turn into a market maker sell model that targets the low down here and maybe even comes down to some of the deeper levels like this monthly fair value gap, which is right here. That's the only inefficient price delivery if price is going to keep going lower. You know, we may even see this turn into a market maker sell model too. That's a little much. It's going to take like 5 years for it to do that. But it's definitely a possibility. If it breaks down below this too, we also have the wicks in here, right? All the wick levels, and then the lows, right? But assuming that it's going to react aggressively from this level and then break down, close below this level here, which is what fully confirms that we're going to dig even deeper, more long term, basically for a whole quarter. You could think that if all of that stays intact. But again, if we get this response below this low here, I would be highly influenced to see consolidation, accumulation, reaccumulation, smart money reversal from a higher time frame PD array, for low risk sell, first stage distribution inside this candle's range, displacement down, breaking through the 50% of that monthly, it's a monthly order block, right? Yeah, monthly order block midpoint. And then second stage distribution delivery, which in this case, if it was to get down to this level, it would rapidly reprice into the wick levels and then eventually get down below the low there. Okay? So again, this is my opinion on the DXY. Fairly simple. You take that information from the weekly chart. If you want to break it down even further, right, again, we can see whoops, I didn't have this saved. Whoops. Oh man. Oh shoot, I named it wrong. Whoops. There it is. Yeah, see, now we could see it here. It's gonna bother me all day if I don't fix the freaking name. Sorry about that. Quarterly fair value gap. Yeah, that would have bothered me all day. See, Tony said that's insane. What? Shoot, did I see this comment a little bit late, Tony? What was insane, brother? Have we made a new dealing range with the wick into quarterly fair value gap? Having taken the lows and highs on the monthly chart. Yeah, actually. Yeah, that's a good way to look at it. That's why I'm saying it created a breaker, bearish, and that's what we've been using all year for bearish DXY, continued support of bullishness in the indices and foreign currencies. It's a big undertone or underpinning of what it is that we've been doing throughout the year to call bias and narrative every single week accurately. Literally every single week we've been accurate. I mean, it's insane. So. And you guys have seen it. Pretty much all of you guys on here right now, I believe, are some of the students that have been with me all year. It's unfortunate that people don't stick around, you know what I mean? Because, I guess it's just part of the percentage of people that will fail versus those that will succeed. Just kind of is what it is. Yeah, send past this funded account. Beautiful, brother. Would you say that a lot of the stuff that you've learned here has been helpful in you accomplishing that? Obviously, it's your accomplishment. I don't want to take away from it, but I'm just definitely curious if this has had a pretty strong impact on you. You spending time here with me in the group. Once you put all the charts, yeah, Tony, absolutely, bro. It just all fits together. It's like a beautiful picture. It's like a dovetail. That's what ICT describes it as. It just beautifully dovetails, Do you often find that knowing the direction is not enough? Because often it takes some sort of manipulation to reach the target. Yeah, knowing the direction is one piece to the puzzle. There's so much more. That's why ICT says, just because you know the bias, that doesn't mean that you'll be able to succeed or be profitable. There's a bunch of things. There's risk management. There's, the current price delivery, time, whether you're following your model's rules or just executing randomly. There's lots of variables, your psychological development. If your psychological capital is not secure, right, and matured, it doesn't matter if you know the bias. You can know the bias, but still fail, right? So there's a lot of inner working that has to take place. Lots of other things that are, in conjunction with bias and narrative. But once you understand the bias, that's a huge portion of the problem solved, of the equation solved. And that's a lot of times what I promise is I can teach you guys how to call bias, how to know where price is going to go. And then, of course, we talk about a lot of different things in the private group about, solutions to each individual problem, which there is many. But yeah, that's the stuff that takes the longest time, because you can understand bias and the technicals and all that, but there's other things outside of it that may block you. Your expectation, impatience, lack of confidence in yourself internally in the real world could bleed over into trading and make you hesitate, make you get out of your fund, make you get out of the trade that runs based on the things that you've been learning, and not even just learning, but seeing actually play out every week. And those of you in my private group, every single day, literally every day. And tell me if I'm lying, Mike. Tell the world if I'm lying, that we do this every single day, every day, and there's always something. Doesn't mean we execute everything, but we always know where price is going to go. Pretty much always, like high 90%. Those of you in my private group, say it in the chat if I'm lying, if that's an exaggeration, or if you have like pushback on it, right? Just let the world know, or everyone on this call and anyone that watches the replay, if what we do here is in fact that accurate, that consistent. Yes or no? And Tony said this program changes lives. Absolutely, bro. Absolutely. Damn right, Nico. Damn right. I'm trying to take a little bit of time to wait for your guys' responses because I know there's a lag. Friday, you were correct 100%. Oh, absolutely. Yeah, we crushed it on Friday. Called it up, and it bounced. That little movement in the indices bounced. But yeah, so again, congratulations, Yasin. Again, let me know maybe through DMs how that experience felt for you. I'm not sure. Did he hop off? I think he may have hopped off. But yeah. Yeah, it definitely did. It definitely did have a crazy run. Yeah, so moving on. Hopefully you guys understand what I'm looking at here and why. On the 1 hour chart, we also have a market maker sell model. Right? Big market maker sell model. We're currently inside the second stage distribution potentially. And as long as this 15-minute time frame, this low to that high, 50% doesn't get taken out. We had a market maker sell model here too that we navigated. But as long as this high stays intact, which is this high, we should be all right. We have an inversion, a daily inversion fair value gap in there. So that's why it was such a dynamic response. Higher time frame levels. It's the missing piece to most people's puzzle. Right? So yeah, let's hopefully everything's clear as far as what we're trying to do there. Sorry, I'm seeing like some alerts on my my dashboard. It's kind of messing with me a little bit. But yeah, so hopefully everything makes sense so far. And given all the back end that we just did, we could look at this now and think, okay, well, there was an SMT at the highs up here, I believe. Yeah, there was an SMT up there. But if DXY is going to continue to drop, the yields are going to continue to drop, our expectation is that the bonds are going to rally. We should be able to see this, as we assumed all week last week, right? Well, up to this point here, this high to that low is a balanced price range. It should not close below the midpoint. Change state of delivery was here. And until price got above this, or above this high, right? It disrespected this breaker here. We talked about this on Sunday, last Sunday. I wanted to see if this breaker would hold. I said if it doesn't hold, then it violates the midpoint of this. We're going above this high. If it gets above this high, we're in a type 2 dealing range, and we're probably going to keep going higher. And if it breaks outside of this daily fair value gap, it should use it as support and go higher, and this should be left as a balanced price range, right? Price goes lower, taps into the BPR, rallies up. Right, so all of this is another balanced price range style delivery above this balanced price range. So we have one here, this high to that low, that's a balanced price range. And so now we're inside the wick here. And so now price is tapping in, and now it's moving to the buy side. So until this was to be taken out and violated, right, I'm going to continue to push this higher. And I'm going to classify this whole entire price structure as a potential market maker buy model. Simply getting up into this can be framed as a market maker buy model too. Consolidation. We have accumulation here and here, but let's just talk about this one here. Accumulation in there, reaccumulation. That reaccumulation phase is also a distribution phase on the right. ICT says that sell-offs, right, anything going to the sell side sell side is distribution, buy side is accumulation when you're talking about market maker buy and sell models. But I generally just put a blanket statement so I don't have to explain this. But I know that those of you that dig into ICT's videos about this, you'll see that he'll say this is distribution and the buy side in a market maker buy model is accumulation. I just simply say accumulation, and accumulation is on the left side, distribution's on the right side. I just keep it easy like that to make it simple. I had to do that for myself. I mean, obviously, It's not an overly complex topic, but I've tried to simplify things dramatically for myself. So, and I mean, it just works. Look what it's been able to allow me to do. Um, you know, I mean, the testimony is the result, and week to week, how things operate, passing funded accounts, just smacking things on a regular basis with my private group. Obviously on live with the YouTube family too, but So yeah, we got this wick in here. So again, as long as we stay above this daily fair value gap, this low and this wick in here, and the 50% of this high to that low, we're going to continue to have a pretty solid brick wall down there holding price above this low. And I mean, quite frankly, above this too, because all it did was manipulate below this low, take that, and then rally up. Those of you that are in my private group that were on the call with me yesterday when we talked about order flow, real-time order flow, I want you to take this example today as a homework assignment, right? I want you to look at this market and then go look and see. Use that checklist, right? And see if you were in price taking executions, or if you executed down here for whatever reason. Count how many things are in alignment with the list I gave you guys yesterday, right? And then get back to me a little bit later today. I'd love to see, you guys do a deep study on what we talked about yesterday, because it was absolutely, I mean, it's literally ridiculous, right? So yeah, that's an assignment for you guys in my private group. But yeah, so again, for this, to keep it simple, sell side invalidation level I had marked off for all the way down here, and once it got above that, so what is that showing us? Sell side has now been invalidated, right, in terms of identifying shorts. And until it breaks down below this now becomes buy side invalidation, right, or an early sign, right? It's an early buy side invalidation signal, right? So yeah, now we can start getting some projections. The ones that overlap the most are generally the most dynamic targets, at least from what I've seen, what I've been able to study. It's funny how it aligns with a relative equal high, right? This one here, what is that? What does this line up with? What does it align with? What did this projection align with? A high, right? See, let's move to the daily chart and see what else is there. Yeah, I think I'll keep the 8 hour. It's a bigger range. Maybe encapsulate that too. So again, this here, if it displaces this low to that high, when it broke down below, it created a market maker sell model and a balanced price range to the buy side. So the deeper it runs into it, the more confirmed it's going to be to keep going higher. Right in here, I'm pretty confident that because the DXY looks like it may continue to go lower. Obviously, we want to see displacement below the swing low here on this weekly chart, which is right there on the daily chart. We've already confirmed a lot on the daily chart. I said that if we got into this wick last week, or this fair value gap, if it holds that, it should leave most of it open if it's going to go higher. If not, if it closes below this, we're going to continue to see a drop in price and probably target down here, which is why I had this up, right? I had this up since last week, just in case this was going to be violated. Otherwise, we would have kept going higher. We have went from external range liquidity, and then when we started last week, we wanted to seek internal, give a partial closure, and then expand aggressively if it was going to be trustworthy. That did not happen. So what did it do? It slid all the way down to this. Up to this point, it was still potentially going to go higher. But now we can clearly see that it reached down into this weekly bullish order block, right, which is here. The daily order block, which is here. So that was the target from this high. Instead of going from stops to inefficiencies, we're now looking like we may go from stops to stops down there. And if that's what happens, that's a reversal. And that's a smart money reversal from quarterly higher time frame level. So that is very significant. If you could pick the point in which price responds to a level like that, generally that is, again, it's a higher time frame level. What leads to big moves? Higher time frame levels, right? And this is, in my opinion, been a pretty solid reaction. So if we can, get even deeper, take this out, that's a weekly shift in market structure. And it's a failure for us to go from, stops being taken to inefficiencies or a PD array like this, like an internal order block, back to stops, back to the internal, back to stops. Going from stops like this or the highs, failing to go to the internal range liquidity pool and bounce, breaking through that internal liquidity pool that should have held price and pushed it higher, and then in fact inverting it. I mean, all of that is beautiful indications in institutional order flow that we are potentially changing and not necessarily going to keep favoring buy-side delivery in this case. So again, in order for us to get back in line with going up above these highs again, maybe targeting this larger high up here from this candle, in order for that to happen, it's going to have to displace and get back above this fair value gap. This delivery higher, lower, that whole range is now a balanced price range supporting sell side. So again, there's lots of things in our corner basically allowing us to support that we're going to potentially target lower sell side delivery. That being this low here, at least. We are inside this wick here, so again, we got to watch what that response is going to be. I guess that one didn't translate either. Let me actually... transfer that so we can have it. Let's have it there too. So again, this wick right here is this large wick. You can see how this too, right? The monthly wick, how that response is overlapping PD arrays, right? The response from here is overlapped in PD arrays. Quarterly fair value gap that this high reached into and now it's responded away from. We have a high, a previous month's high, swept. And then we also have this monthly wick, 25% level, perfection delivered from it. Failure to get up to the 50%. That is still a bearish market. It's still interested overall to potentially want to keep going lower if everything continues to support that idea, which it's doing so far. It just, all of this delivery up there may have been a manipulation to get us up to this particular PD array, because large funds like big PD arrays, big time frames, big higher time frame liquidity pools. So this may all have just been a setup to trigger this into a market maker sell model and then start to target all this trend line liquidity that was ramped up artificially, especially since this is happening ahead of a rate cut. So in December. It's very interesting how things start to align, right? So yeah, we'll continue to monitor that. That's kind of my opinion for the DXY, though. I don't think there's really much more I need to point out. Let me ask you guys this. Does everything make sense? If I was to turn everything off right now, would you have an idea of what is happening in DXY and all these other assets we talked about? Just throw one in the chat, and we'll move on to the indices. Okay, there's a 1. Damn, I guess the lag's not as aggressive. Maybe that changed a little bit. So yeah, and then of course, then we got the this one too. Does it make sense here with the currencies as well? Does everything make sense with the currencies as well? As far as what we're looking for? Especially if DXY is potentially going to support downside. Yeah, I like to see the ones in the chat. That means I'm doing my job correctly. And I'm grateful. All right, perfect. So, yeah. Actually move this over a little bit. Just throw one more annotation and we'll be on to the indices. I appreciate you guys being patient. You know, you guys are always the ones that are patient in these calls, and it's funny because, you know, the market rewards patience, and this skill set when it comes to study or anyone teaching, that also rewards patience, and many of you guys are a testament to that. So thank you guys for being patient. You know, but this is kind of just the way it is. This is why the industry is what it is. Yeah, Tony, you guys watched that whole move. You guys watched the whole every single price leg of the year. Because since I've been live every single week, you guys have watched us call literally almost every single price leg. You know, give or take, 90%, 90, high 90%. Obviously, you mix in sometimes when we start the day and we have to be flexible because a contingency plan kicks in. But even when the contingency plan kicks in, we know exactly when it's going to likely be a turnaround, right? We know exactly what it's reaching for too, even in the moment where, maybe price doesn't necessarily go straight to the level that we first assumed. There's a process of being flexible, the adjustment process. And it's one thing to say, oh yeah, well, you're able to understand where it's going to go when one thing fails. It's one thing to think that way, but it's another thing. It's another realm of skill when you're able to engage it as if you knew already that it was going to turn around, right? Because if we do things or we have an opinion and then it's potentially incorrect or maybe it lags to get there, being able to navigate the price action until it gets there, or even if it pushes away and still have a logical target that you can trust. Most people can't say they can do that. You see these people that have boxes going to the buy side, boxes going to the sell side, and they're just like, oh, well, we'll figure out what it wants to do based on this. No, we have a solidified opinion going one direction, and then a contingency plan, well-defined, very detailed, with secondary targets if necessary, right? And then we just, our mindset, it's like a switch that flips, and there's no friction when it comes to making those adjustments. It may be some friction for those of you that may be still kind of new, just learning this process, especially you guys in the private group, because we talk about so much. And there's like much more coming out. Like I talk about so much stuff every single day. A lot of it's very repetitive. But, once you understand the process, how to navigate and breed price the way that I try to highlight, in the way that ICT talks about, he has multiple ways of doing things. Here, we have a certain amount of things that we do, and I don't use every concept. I use the stuff that works for me. I understand most concepts, so I can be a flexible mentor, and I trade multiple models, so, it kind of is helpful, or it is really helpful, actually, because I could literally help anybody. I've proven that to myself. I didn't think I could help everybody. And I still probably can't help everybody because some people don't listen. Some people refuse to be disciplined. Some people don't care. Some people want to trade against, what the teachings are, and implement other things. And I mean, it's unfortunate. It really is. Because this is the way that the market operates. You know, if there's indicators, or any other concepts, be a purist first before you want to include other stuff, because you just do yourself a disservice. It makes it harder to understand the concepts. But let me see. Once I stop being greedy, this can really work. Yeah, 100%, bro. 100%, Tony. It's the name of the game, you know. The technicals you can learn fairly quickly within a year or two. But once you learn what you're looking for, now the games really begin. Because now it's going to show whether you've done work on yourself all through that process or not. And if you didn't put work into yourself and try to grow and, highlight issues mentally that may make you stumble early on, you're going to have to do it later. And again, so then you have to add that learning curve to the 1 to 2 years of learning technicals. And just that statement alone shows you why this takes a couple years, generally 3 to 5, sometimes more, for people to really master and be like, all right, well, I can trust what it is that I'm doing is a reliable way of making money if you choose to go that route. Right? So anybody on social media that says learn this and be profitable and be a millionaire in 5 days or a month or even a year, they're pretty stupid, right? I have one student out of over 230 people that I've mentored in the last 3.5 years. One student that has securely been able to knock down insane amounts of money in less than a year. One. Okay. Everybody else obviously arrives maybe a year and a half. That's the second fastest. I have a good amount of those students. I have some that, it's been, 2.5 years already and they're still kind of going through it, just because of internal situations and, some small little adjustments that need to be made. And then discipline and all these other things, but one student that was able to take a year of me teaching and pushing him into ICT concepts and, answering his questions, one student that was able to do it in 1 year. One. Right? And that student's name is Harley. Those of you in my private group know who Harley is. You guys here too, I've mentioned him. I'm trying to get him on live calls at some point here on YouTube. I want him to start his own YouTube channel, and if I'm being honest. And I want to support him in that way. But yeah, it's that's the thing. You want to have the right mindset, and part of it has to do with expectation. That doesn't mean it's going to take you max amount of time. It's just depending on you. How much do you study? How serious do you take this? Do you treat this like a gambling game, a slot machine, or you treat it like a business? Do you treat it serious, or are you half-assing everything, claiming that you're working hard? Only you can answer those questions, right? And only you can make it speed up or slow down, But of course, having good resources like this community, having someone like me and the students in my community that are willing to help, that have been through it, that are not greedy with their information, not greedy with their time. I mean, that is the stuff that can really change your trajectory and change the speed in which you're able to get to where you're trying to go. But it's going to take time for everyone. There's no getting around that, It's a hard thing to do. It's the hardest thing to do because of ourselves. So if it said, I feel your pain. I want to finish this year consistent and take that momentum into this year. Yeah, Tony, I think you've had a lot of good accomplishments this year. There's definitely, every time you hit a new level, there's another level that forms. So you do this until you get to a level that you're comfortable with, and you just be like, all right, you're going to continuously try to grow, continuously try to sharpen your edge in terms of practicing, not adding. Once you get something that works, don't add to it. Once you can answer bias, narrative, risk management, targeting, what time you're going to trade, what asset you trade, validation, invalidation. Once you understand where price is going to go, bias and narrative wise. If you look at the 11 subjects I have in the trading plan development section, I think I share that too in the free Discord. But once you have a solution or a process for every one of those things, every one of those subjects, if you have a solution for it, there's no, or a process for those different subjects. Maybe there's multiple processes that you have for each one. Once you're able to say that you have that in place, there's no reason to add anything. If you have a model that works, every model has continuation to it, right? You can increase your understanding of all the PD arrays, because every PD array is like a building block as you're watching price print, and as things form that you're aware of, they should be able to hold. And if your target is correct, if you're correct on bias and narrative, most of the stuff that's left is psychological and managing a risk, and not over trading and understanding the conditions, getting pattern recognition for different scenarios, how your model looks in all different conditions. That takes time. That you can't just learn about all the conditions, because it's always different. The market's always a little bit different when it comes to conditions. There's similarities, right? But you're going to always be forever adding to your bank of pattern recognition, conditional awareness, and it's just one of those things. But again, once you have all 10 or I think 11 of the subject matter that I have labeled in the private group and labeled in the trading plan development sections of the free group too. I believe I have it in the free group as well, just as a template. You really have nothing to worry about. At some point you are going to stop being a student. The only way that you're going to be a student at some point, like me, I don't learn any new concepts. I don't need anything more. So I'm still a student of myself and of the market. I still chime in with ICT. I pay attention to what he's talking about, because he talks about psychological stuff all the time. You're never going to be good enough to just give up on maintaining your psychology. Never. You're going to forever be looking to continuously improve your psychology, because life changes, things happen in life, and you have to have the skill set that allows you to ground yourself. Your life has to project what it is or what it means to you to be a trader. If you're disciplined, you want to be a disciplined trader, you want to be a confident trader, you want to be all these things. Well, you have to be that type of person in real life. You can't have a disconnect and live a double life in trading. It doesn't work. It just won't work. So again, these are things that are very important. And new levels bring new devils, right? One of my other mentors says that all the time. And he's an ICT trader. His name's what the hell am I blanking on his freaking name? Joe Miller. There you go. That's his name. But yeah, new levels create new devils. So it's a constant battle of improvement. All right. So yeah, hopefully all this stuff makes sense so far. And Tony, you're definitely going to end strong. As long as you follow the rules, you'll be all right. You're doing very well. You've made a lot of strides, I'm sure, this year. As far as what I've heard from you, you've done pretty incredible things. Accomplished some incredible things. So new levels you hit, new wisdom you gain. It's going to bring new devils, new lessons, new situations you have to improve on. All right, so with the last 20 minutes, if all this stuff makes sense, we will dive into the indices. So yeah, this is the move that Mike pointed out. He said the move we talked about on Friday. This was the move that he pointed out. It was like, what, 50-point move pretty much. Talked about all this. I'm not going to get into all the deep details about this. It was just way too much. It was way too much. Mike can testify to that because of all the consolidation and stuff like that. I mean, we use a suspension block. We use a 6-minute order block. Held up bullish. Change the state of delivery. Sweep on the stops. SMT at the lows. We were talking about hourly highs and lows, how to navigate that. Just a lot of things that we go into great detail in my private community about. And then this was the 50% of the daily fair value gap. use that as support. Market maker buy model, market maker buy model. I mean, we go real deep, you know, real deep. It's too much for one video, honestly. So, yeah, so if we come over here to this chart, let's move it up there. And again, those of you that may be new or maybe just watching this replay, again, if you want to be part of a community that really plays no games, it's proven for a whole year straight and for 3.5 years with a mentor that has proven all this stuff, that has proven he can help people. I mean, people in the chat, right? Like the students in the chat right now, like they're all people that are, you know, getting information from me, you know, that I've built relationships with because of me teaching and actually having something worthwhile to listen to, you know. So if you want to take things to the next level, if you feel you need that one-on-one support, which not everyone does, I don't encourage everybody to join me in a one-on-one capacity. I really don't. You have to be really taking this serious. You have to really be ready to dedicate time and do what I ask you to do what ICT tells you, which I'll remind you of nonstop. You know, and if that's not something you feel you need, then you don't have to really think of it. But at the same time, I do offer daily live calls. So if you like this type of stuff, you like someone, you want to be around someone that knows what they're talking about. You want to be around students that also vouch for what it is that I'm saying, because they have no reason to fight for me if I'm lying. You know, if I'm talking nonsense out my ass, saying that I'm calling the moves every single week and I'm that accurate, if I'm talking out my ass, the students in this chat in my community have zero reason to support me. I don't know any of them in real life. None of them are my personal, real, like local friends. It's all, you know, all students that I've met. Wonderful people, I might add, that I've met in this capacity. You know, so they have no reason to back me up if I'm lying. You know, but yet they come out here and continuously support what I say. Say, yeah, like he's telling the truth. He's really doing it. So if you want to be around a group like that, not only me, myself, because I'm like one element that makes community what it is in my apprenticeship group, but there's also students all over. There's profitable students all throughout the community. You know, I have students that range in age from not even 21 to 65, right? All in between, you know, so it's never too late, right? And it doesn't matter where you're at in your journey. Getting around a community like this does wonders for you, you know, and, you know, it's the most reasonable community in the whole industry. I've done that purposely. Also let my students kind of set the pricing, what they think is reasonable, yet also not super low ball, right? To the point where ignorant people can still join, right? Or still would be interested in joining and come and try to wreck things, you know? So it's the wall is there, because I used to teach for free, but people waste my time. They wasted my time. I spent hours, just like I'm doing here, one-on-one with like over 50, 60 people within one of the years. And students were like, dude, why do you allow people in for free? Like they come here and they spam and they bitch and moan and complain and don't even listen, and you know, it's pathetic. Let's make things more exclusive and put a wall so we can filter people out. And so I was like, you know what, that's not a bad idea. And everything that it's turned into, the private group, the apprenticeship group, it's because of, you know, some of the students in this chat right now on this call, you know, and a lot of them, you know, that may not be here, but are in the group, you know. And every single day we have a routine. We hop on every single day, literally 7 days a week. I'm up at 3 o'clock in the morning, a.m. Pacific Standard Time over here on the west coast of America, you know, and I'm out here answering questions. We're constantly live with each other, constantly sharing ups and downs, because it's not always straight up, right? We talk about the realities. We do so much stuff. So if you think that type of culture can help you out, because I personally think it will, based on what I've been able to witness, and just what I know, right? Like I know I know what I know, and my students are now knowing what they know, knowing what I'm talking about here. And they're getting clarity deeper in a more solidified conviction behind the fact that this is in fact doable. Understanding ICT concepts at a high level is absolutely doable. It may not seem like that light at the end of the tunnel is right in front of you right now, but being around people that have been where you're at and know how and have found solutions to get you out of whatever it is that you're struggling with, it's priceless. It really is. And, that's what we offer in the private group. And me as the mentor, I could have some of my one-on-one students, kind of testify to what it is to be a part of that portion of things, and just basically have access to someone that knows how to do things, doesn't claim to be perfect, is honest, shows the ups and downs, but at the same time, I'm not going to diminish, or I don't diminish how effective what it is that we do just to sound humble. I am humble, I purposely don't show what I do, right? Like monetarily, I do 3 times a year, and that's the agreement that I have with myself, because I don't want to attract signal junkies. But you can put 2 and 2 together. Most students in the chat right now, they have, but if you're watching the replay, again, if this is a type of culture that you would like to or think can benefit you, because I think it can, and I'm sure everybody in the chat right now that's part of that group can also attest to it. Even students here just on YouTube, even if you just hang around here on YouTube with me, it's still valued. I appreciate it. I appreciate your time. You'd be anywhere else, but you're here, so it's much appreciated. But if that is something that you feel you need, right? Like to have access to a group that is absolutely dynamic, let alone me as the mentor who proves it every single day, the effectiveness of it. But again, if that's something you want to look into, I'm more than happy to answer questions. I'm more than happy to, tell you more about it if you want. It's not for everybody. But again, if you just want to join live calls with me, my students told me to open up something that allows for that, right? And so I have allowed for that at a lower tier, right? Which does not allow anything that was pre-recorded, and it doesn't allow one-on-one scheduling because I already have enough to deal with when it comes to one-on-one students. And that's something that they chose to do, and they took the opportunity. But again, if you just want to hop on live calls more, that's an option too, right? So I just wanted to mention that because a lot of people don't know that that's even a thing, that I offer that. So thank you for bearing with me. Kind of just, it is what it is, right? I have to let people know, otherwise they don't know. And I can't save those who may require that, because not everyone's going to require that. Some people just are good on my YouTube channel and they've had breakthroughs, and that's kind of the point. But I myself needed a lot more help. For whatever reason, my personal makeup, I needed someone there with me, teaching me every day. And I found ICT, and I felt like that wasn't enough. So I went and found veterans in the ICT community that offered this same service for 10 times the price. And I paid 10 times the price to access someone just like myself and their time, because that's what it's really worth, especially because we know what the likelihood is. We know what the ceiling is, and there is none, right? There's no ceiling, like when you know this stuff. So, but again, I want it accessible to everybody, so I make it accessible to everybody and I take the advice of my students, and that's why this community is what it is, the private group, and hopefully one day the YouTube channel can also be something spectacularly large, at least a little bit bigger than it is right now. Because I know what we can do. I know what this stuff does. I know what I know. I know how this stuff helps. And, doesn't hurt to have goals, right? So yeah, if you guys have any questions about any of that stuff, just DM me or check the link in the description down below. And let me know if you have any questions, right? But yeah, so like I said, those of you that have been watching me for the last, let's just say 2 months, right? Encapsulating all this price action. Pretty much most of you guys should remember that I called out this gap down here. And most of you guys that have been with me for the last couple weeks, couple months, probably know that I highlighted this as well. Basically, when we're looking at this price action here, with everything that we talked about from the live calls from Fridays up to this point, I literally have called through the analysis that I've given to you guys for free on YouTube and in greater detail in my private group. We literally called this move down to the sell side, knew exactly how to trust it, continuing to the downside, all the way up to the exact target that I talked about and highlighted for weeks. Go back on some of the other live calls, prior to this one. Go back 3 weeks ago, for a whole month ago, and tell me that this was not highlighted just like this. And I said that if we can do a couple things here and there, it'll reach down to there. When we left this open, I said it was going to potentially want to come back to it. Same with this. When we left that open, I'm like, they may not want to leave that. They may come back later. Throughout this whole price leg, once this low was taken, well, technically once this order block here was taken, right here, from this order block, I said it was probably going to target down to there. As long as it stays below that, we'll continue to march lower. Targeted here, here, lots of targets along the way, obviously. But I have literally called, in recorded videos, documented, price going from up here down to this gap, and then I mapped out this entire thing too. And again, one of my students pointed out what happened on Friday, how we called it, and I was correct. And it just rampaged. And I even talked to my private group about how we could continue to support that it's not going to go short, even when it traded into this. This gap getting traded above was enough, given what I know, some of the more advanced topics, that it was likely to probably continue. And then the deeper it got, the more conviction we had that it was going to blow these highs out. And we were correct on that too. And we called it a market maker buy model and a failed breaker and a failed bearish order block once it hit the 50% of that. And we were able to continuously call price action all the way through the buy side. Now that we're above this, I got the same type of forecast. Fancy Pilot, what's up, brother? Sorry, did you just, I don't know if I, maybe a little late saying hello, but sorry about that. Welcome. But yeah, so in this scenario, right, this reaction here was off a 3-day bearish order block that encapsulates all of this price action. Price ran up into that. It didn't break this high. So what happened? We continued to trust that it wasn't going to break that, right? Because of this daily order block, the fact that we have that second, the drop down that confirmed that we were going to keep going lower, which is basically a double change of state of delivery, order block being respected. This gap, liquidity void. If you go back up to this week, you'll hear me talk about that in great detail, how we navigated all of that, how we pieced together the understanding of this. Market maker buy model failed to market maker sell model, back to market maker sell model, market maker buy model to sell model, back to market maker buy model. We literally mapped this whole thing out. I'm saying that numerous times because me saying that, yeah, I called it down to this gap, and now from this gap, we're probably going to go up to this gap. I mean, that sounds pretty insane when someone's going to do it in hindsight after things have already played out. But no, go back and look at the videos. The proof is in the pudding. I literally say exactly what has transpired here. Little nuances here and there that kind of deviated, like this high. Like the SMT that happened in here kind of was a little bit sketchy. This here too, right? I called this, right? This was a intermediate term high when it was in this level. Once it broke down below this, it became an intermediate term high. Or it became a long-term high, my bad. And then this became an intermediate term high. And then I treated it as such. An intermediate term high should not be violated. All of this deep context is something that I went into pretty great detail with one of my students named George, but then also with the whole community as a whole, the private group community. Right, there's just too many details for me to break down in this. We're already kind of 2 hours deep in the video, so kind of want to get through the forecast. But just know that I called this entire move lower and higher. And if you go back and look at some of the details, you'll see what I was talking about, at least for the most part. And yeah, right? So now moving forward, because we've now changed the state of delivery up here, like I was telling my private group yesterday and the other day, as this was unfolding all throughout the week, we swept liquidity. There's also SMT at these lows here. Massive recovery taking place. We've hit this gap in here, so this is definitely going to be something influential. We do have the wick in there, but we also have all the different quadrants inside this daily order block, or fair value gap, my bad. We're also seeing that this bearish order block on the daily chart's being violated up to the 50%. So again, if we can stay above this gap in here, okay, if we could stay above this and then bounce off of it, we have highs here, here, wick quadrants, and then we got all the way up to this gap up here, which again, I'm calling out right now. I even told the private group to save the screenshot because I screenshotted it when we were way up here. I'm like, screenshot it, right? Screenshot and save what I'm saying. And if it breaks down and breaks through all this, which it ended up doing, right? We kind of worked within the price action there. But then once it broke through this low here, I told them I was 100% confident that we're most likely, unless it violates this and comes up into there and breaks into this. In these highs up here, this is where the nuance came in, right? Where some stuff kind of got mixed up. For those of you in my private group, you remember how when we were calling this higher, inside this, I wanted to see, can we get up into this gap, then go lower and target this? Use it in that context? Or is it going to fail to target this, reach down, sweep this, and then come all the way back up there? We literally painted that scenario out before any of this price action to the right took place. From this high here to the right. Right? Nico, if you're still in the chat, you remember how, I believe, was it you or Byron? I think it was Byron. Maybe it was both of you in the private group that called the short down here to go deeper. I said that the short here, if it fails to get up into that, will break out below these lows here, the trendline liquidity. And then I want to see and study if it was going to bounce. And if it doesn't bounce, it'll continue to slide to this gap for this specific week. That was part of the analysis we did. I remember it vividly. Hopefully you guys remember that too if you guys are on the call. Because you guys played a role in that too. We kind of were bouncing ideas off each other. And I mean, we just continuously walked the whole price action together as a group, not only with just one-on-one students, but also students that are just in the group to be a part of the live calls, all week, 7 days a week. So if you enjoy these calls, again, I offer them 7 days a week. You just got to, go check out some of the details. But yeah, it's kind of like the back end, kind of what's been taking place for those that may not have been here. A lot of people probably just haven't been here because a lot of this happened in the private group. And Tuesday that week was here. So the move that took place was on Wednesday, which was outside of the weekly calls here on YouTube. I did share the ideas in the Discord, the free Discord. But video-wise, getting into great detail in the moment, because there's so many details, it's a little bit hard to just type it all out and then send it to both communities and save it in my journal. I mean, it's just too much. So you're either on the live call, watching the replay, or you're getting like screenshots if it's the free community. When we're live on YouTube, obviously it's in depth, but yeah, with all that back end being said, we got the SMT at the lows, weekly low taken. This was a weekly bearish breaker we started last week looking at. We wanted to see if that was going to respect and continue to drop. Because it didn't, and we got back above this gap, if those of you that were with me last week remember me talking about this, last week on Sunday. If you remember, I was talking about this weekly bearish breaker. I said that that's going to be our line in the sand. And if it breaks above that, we're going to have to see if this can get traded through, because that'll then confirm that we're going to target this. And all this move was basically just to target the lows here, to balance out this inefficient price delivery that had a literal huge gap with zero price action, which is classified as a liquidity void, which is also in this instance, it was a new week opening gap from like a couple weeks ago. And so when it opened up, what did it do? It ended up trading back into the range. So we were still watching it up to this point, potentially thinking it still may have a chance if it wants to displace and DXY was to rally. In that same moment, this fair value gap on the daily chart for the DXY was failing. So not only was it blasting through this after it hit the quarterly fair value gap on the daily or on the DXY, it was blasting through, not supporting this as a bullish run or a bullish PD array. This was also failing to be respected as a bearish PD array to push us lower. So it just inverted, right? DXY, instead of going higher, ended up going lower, breaking through this level. Same thing happened here. Hence the result that we see and all the adjustments that we ended up making to get in line with this. And as Mike in the chat said earlier, we called it to the buy side and we were correct, right? So yeah. So given all that back end, hopefully it makes sense as far as, you know, what has caused price to get up here and why our opinion is that it'll continue going higher. You know, hopefully all that makes sense right up to this point. Do you guys have any questions about anything up to this point? I only got a couple more things to point out, so I want to make sure that everyone's solidified. Just give me a 1 in the chat if everything makes sense, and I'll keep moving forward. Because from this point, I mean, a lot of the battle's already dealt with. We have all the context that has led us to continue to want to see price go higher. Change of state of delivery. SMT stop run with a failed weekly bearish breaker here with this candle. We have the respect of this candle here. And so, you know, that helped us confirm order flow is going to target the buy side up here on the gap, which, again, like Mike said in the chat, we were ahead of. We called it. Those people that watched us do this entire thing in the private group. So you can trust and believe that I'm not blowing smoke up your ass, okay? So, yeah, just throw a 1 in the chat real quick so I can make sure everyone's all good, no questions. And Tony, you're welcome, brother. I'm not sure if that was a late response to your thank you, but you're welcome. One, okay. Perfect. That was a pretty intense lag. Holy crap. The lag's been pulling in and out, right? Like it's less than it's a lot. Less than I notice it. It's kind of strange. But yeah, so given the fact that we're already up here and all the context I just shared with you guys is basically allowing us to continue to want to see price continue to go higher, we're basically just going to be in a mode of observation with this, see if this can stay intact. Line in the sand will be if we were to get back down below this. That'll then put my attention back down to the sell side, or potentially seek the 50% of the order block that led to this run higher. Yeah, Tony, I don't know. My bars on my Wi-Fi have 2 bars. It's been like this for literally the past week and a half. I have no clue why, right? Like, I have no clue why. But hopefully everything's been solid so far. You know, hopefully, yeah, you guys haven't had any lagging or anything. I tried my best to get everything solidified, but also have it in 4K, so it's crystal clear. Because, you know, why not? You do have to sacrifice with the lag a little bit because of the latency, because it has to use a lot of effort, I guess, to have more high quality stream. But we're not trading live right now, right? So I guess we can kind of deal with a little bit of a lag, you know. I think you guys would agree for better quality. But yeah, so the order block here, again, run on stops. This is the foundation of what has happened. Run on stops in here, change in state of delivery, respect of that change in state of delivery here when it were traded back into this, inverted fair value gap again, another inverted fair value gap, multiple swing highs being violated, bearish order block, getting traded through up to the 50%. Seems like it's going to continue to support that idea. So opening up this week, I wouldn't be surprised if NFP, if it comes with a heavy news release, I wouldn't be surprised this whole entire week went that large. Who's to say that this next week is not going to be large and get up here? One thing you do have to consider, though, is the fact that this was a large previous week. So the previous weekly candle was massive. So what do large ranges generally lead to, if you guys remember? What does it lead to, generally, condition-wise? Large ranges lead to what? Large ranges lead to small ranges. Exactly. So with that being the fact, doesn't mean it's guaranteed, but it's definitely something on top of the NFP week, on top of the fact that it's the first month of the, or first part of the week, the first week of the month, I mean. And it's, kind of the start of the week ahead of an NFP announcement. All of those things to be considered force us to have to pull back on our risk a little bit. Yeah, he didn't respond to what I mentioned earlier, huh? Asked him a question. He didn't. I think he may have hopped off. Just came in, said what he said, and may have hopped off potentially. Yeah, I was definitely wondering that too. But it's what it is. Cut risk to low percentage. Yeah, exactly. Exactly. We got to cut our risk with all the red flags. So with that being said. Again, all the context I just mentioned, again, I hope it makes sense because it should be crystal clear as far as why this is going up and why it could be trusted, how you could have trusted it in terms of perspective if you were able to understand what I talked about in the moment, which, we were able to do in the private group on the live calls. But hopefully in hindsight, you guys can see the thinking, the thought process that led me personally to continue to trust that it was going to now go higher instead of thinking that because it was going lower here, anything that was going higher was going to push it lower. That just wasn't the case. Change the state of delivery here after taking stops. The context is important. So because we got up above this, we now have a balanced price range down below here. And we're blowing through multiple inversion or multiple fair value gaps. So it's like ICT describes it as a rock climber. The peak of the mountain we're trying to climb is up here. Do we have to get up to the top to be able to think that we're accomplishing something? Probably not. Or not probably, but absolutely not. Right? Getting up above here was enough. Getting up above here would be enough. Getting up above here would be enough. Getting up to this gap here was enough. But as we're going higher, as we're looking to continue to monitor this continuing, it may have a little pause in here, right? Maybe stabilizing its grip a little bit inside this piece of price action. That's going to hopefully turn into an inversion. I believe that's what's going to happen if we're going to keep going higher. And then from that context, I don't think we should be able to go down below this wick 50%. So as long as it stays above this wick 50%, we could look to trade into this maybe. Maybe that's what happens this week, right? It opens up, maybe drops down, presents a wick in there. And then maybe uses that to pair counterparty liquidity to the sell side with smart money buy positions targeting buy side liquidity. So going lower, manipulation, maybe it looks to dive into some of this, maybe not, right? Maybe it just wicks down into there and the bodies stay inside of this daily fair value gap. That's what I would prefer to see on this next body candle or any of the candles that form after this, considering that we've got sell side, buy side taken. This is also a balanced price range, same as it was down here, same as it was here when it traded back above it, right, with the buy side and bounced. This essentially, where's this? I have this cool little tool that I used a long time ago. Let me see if I can find it. I can't even remember what the hell it was called, but it was really cool. maybe they don't have it anymore. Oh man, it looks like they don't have it anymore. Oh wait, no, I think is it this ghost feed? There it is. Yeah, something like this. Where the hell is it? I'm gonna have to change those other ones to that color. But yeah, this is something that I'd like to see happen here. Right? I wouldn't be surprised if something like this reaches down, sweeps into it a little bit, very shallow dig into that. Because this is already a balanced price range. Remember what I say, a wick overlapping a displacement leaves that whole entire area as a balanced price range. So it's not necessarily needed or highly likely for them to want to dig lower and close in the whole entire thing. It's not necessary. You know, look at this. This is a balanced price range in here too. It may not even have to come down into that. It may just go like this. Right? It may print it like that. Maybe it sweeps a little bit, but it doesn't necessarily have to. And then it may look to jolt from there on its way to our overall target, potentially being the gap up here, because that's the most inefficient price delivery in the whole price leg. It's a regular trading hours gap from a long time ago, and I'll show you what that is right here. Right? It's actually right there, the wick right there. Buy side, sell side's offered in that area. Buy side, sell side, lots of delivery in there. In here, it doesn't have any liquidity, right? It doesn't have any offered price action, right? So it's a gap, right? It's a regular trading hours gap. And so these things act as magnets, just like how this one did, right? Just like how this one did, right? Went up, came down. Just like how this gap did, right? Offered aggression to the downside. The wick up here offered buy side, right? It just does this over and over and over and over again. You know? So yeah, I feel like it's going to magnetize itself up to there, okay? And I'm assuming that we may see, what the hell? I'm assuming that we may see something like this, right? It may look to open up, mess around a little bit in this gap. Preferably we stay inside of this. Maybe it wicks down below this Friday's low, because that's what this is, Friday's low. Remember the important highs, you guys, the highs and lows. You want to make sure that you're looking at the monthly high and low, weekly high and low, current weekly high and low, current monthly high and low, current daily high and low, and then the previous candle right next to that current candle you're looking at when you're on these higher time frames. Okay, that is the most significant liquidity. When price opens up for a new day, the previous day's high and low are the most important. Because even if it's going to run up to this level up here, this candle opens up, most of the time will manipulate into that range a little bit, the previous range. And then when it's going to break out of that range, it's going to have to target either the high or the low, because they always open up inside of one another unless there's no wick. Okay? And then you got to think power 3. So the start of the week, Sunday, Monday, may look to give us that retracement down into this. And then NFP, ahead of NFP, it may pause around a little bit. Maybe NFP peaks down into that and then just explodes. And that's the move that gets us up to here. You know, I could totally see that. Remember, news events act as macros for higher time frame delivery, right? So if you want to see this fair value gap delivered to this high or this low get swept and then deliver up to this high, most of the time you're going to need some type of news event. When you want this high to reach down into this gap down here, it's going to need a news event. If you go back to the Thursday that delivered into that, I'm pretty sure there was a news event. I can't remember off the top of my head, but definitely go check and see if that's the case. You know, on this day, what news event came out that could have supported that? I think on November 20th, there was nothing that happened. There was no news, and it just was in a hurry because it's so inefficient down there, and the liquidity is beautiful, and this is what they planned on doing. So all of this was a liquidation event to get us down below this low, and then we failed to deliver this bearish breaker, and now we're all the way up here, and now we're inside this area. So again, in a nutshell, when price opens up here, we're thinking power 3. I'd like to see if we could drop down lower, do something. Here, let me actually just do a drawing what I would like to see price do. I'm not in any way looking for any type of shorts. You won't catch me trying to short this unless something breaks down and, you know, we get down into this level, you know, or something, you know, in the moment encourages me to do so. But I wouldn't be surprised if we get something like this taking place. You know, maybe more price action happens, but overall, the general gist of the matter, I would like to definitely see if we could take out this low. If it can't take that out and it stays available, and this will act as a breakaway gap, it's also, again, a balanced price range. That's what makes it a breakaway gap. Hint, hint, nudge, nudge. Okay. So yeah, this will essentially be my opinion overall. And hopefully a lot of the details make sense to you guys. Are you mapping the November monthly wick? Talking about for the NASDAQ? In terms of the CME thing, we'll obviously have to just wait and see. I mean, anything could happen, right? Doesn't really look like there's too much of an issue. Looks like they kind of picked up and swept out what they had to sweep out. I think that was in here. So what did they do? They opened up, ran price lower, where all the price action was inefficient. They just kind of removed it. Wait, was Thursday the holiday? I think it was. And then after the holiday, they had no London session because the information was just swept out. They just kind of erased it like it didn't happen. That's very interesting. Did they leave a gap? I mean, I guess there's somewhat. That's assuming, though, the price is going to tank lower. Again, all the stuff that I've talked about in terms of the balanced price range and just overall oh, snap, what the hell just happened? So yeah, this order block down here being a balanced price range, if we're going to continue to be bullish, we in no way at all want to see price get down into here. At all. If it is, we may be wrong. Right? If it does, we may be wrong. Right? Yeah, I mean, yeah. Imagine if this was the 5-minute chart, right? Would you want it to come down into here? I wouldn't. We've already broke this order block. We already took stops. This is technically a change in state of delivery. It's also a shift in market structure if you're thinking about the YouTube model. This right here may set up a daily time frame 2022 model. It's also a breaker. Like I said, this high, it's an order block on this time frame. You go to the 8-hour, it's a bullish breaker. So this candle, this up candle here is also another reason why I would not want to see it go down there. It may, anything can happen. But I would absolutely prefer to see that this fair value gap acts like that rock climber analogy, right? We grab this rock and it catapulted, right? We're now repositioning our grip, and now we're going to try to swing back up to the next ledge, right? And then as it crosses over order blocks or disrespects them and creates bullish order blocks and violates new fair value gaps or old fair value gaps, trades to them, through them, maybe back into them once, and then launches off, we're just going to keep marching price higher until something changes. Like if it starts breaking through these levels that have recently been holding as support levels, right? It inverted this daily fair value gap from a couple weeks ago. Well, I think a month and a half ago. And then now we broke above this, change the state of delivery. After taking stops, it's a breaker, it's an order block, it's a large up wick that we've traded completely through with displacement. And now we're back inside this. So again, I'd prefer over anything else to see this type of thing happen. Maybe manipulate lower, take out the lows, come back into that gap a little bit, maybe try to trade into this once more, but simply use that as a redelivery into a bullish order block, bullish breaker, just a manipulation in the weekly power 3, and then try to see price continue to run inside this larger framework, which is a market maker buy model. All right, so that market maker buy model framework, coupled with everything else that I've just mentioned, hopefully slaps a big sticker of clarity on everything that's going on in here. Rodri said something about the wick. Where'd the question go? Oh, there it is. Are you mapping the monthly wick? Talking about that? Oh yeah, absolutely. We're trading into it. Every one of those quadrants is a target. I don't have it on here because it's going to be too busy. It's going to be pulling away from a lot of the things. My main objective is this up here. But a good thing to point out though, so good job, Roger, actually, because as we're moving towards that level, the wick quadrants are going to be your targets. This volume imbalance in here, that is part of your target as we get up to our full maximum terminus, which again, all of this is encapsulated inside of a market maker buy model. That large November wick is also a bearish order block here, right? So all of this run higher above this open price for this weekly candle. Let me see actually. November 3rd. I guess it does go a little bit deeper, huh? So yeah, you should absolutely keep that in mind. I probably have it written down on one of these pieces of paper somewhere. But yeah, as price is moving higher, right, we got a breaker that was invalidated, change in state of delivery, stop run, and now price is coming into this wick here. So we don't want to see this act as targets. Every time one of the quadrant levels gets violated, you want to also see them as support levels as well. That's all obviously within the same picture here, except this has a little bit more details. It's still all the same validity, still all the same structural integrity. And we're going to just continue to see if this can go higher. I want you guys to study if this run on stops, shift in market structure, turns into a YouTube model fair value gap delivery that then sends price higher into some of these deeper levels. Right? And yeah, I guess that about does it with everything that I really wanted to discuss. So we're above this new week opening gap. This is all reason even further for us to not want to see it dig too deeply. This is totally doable. Just to come down a little bit into it. Definitely don't want to see it break past the 50%. If it does, it may not be as bullish as we want it to be. And they may just be holding price a little bit. I think NFP is a big tone setter or a tone shifter. So in this case, we've already changed the sentiment from potentially going lower back in line with the higher time frame, pushing to the buy side on this monthly chart. All right, if you go to this monthly perspective. Oh wait, you were talking about the monthly. I was on the weekly. I was on the weekly time frame. Wait, did you say the monthly? Yeah, you said the monthly wick. I mean, I'm not really too concerned about really any of this, to be honest. Unless it starts to show that it wants to push down into... Oh, wait. It's going to be a new candle. Yeah, you can definitely map that out. But the idea that I was talking about too on that weekly chart with this wick, you definitely want to keep that in mind too, because that's also valid. I totally read that wrong, or did it wrong, even though I read it right. I don't know. It's too much stuff happening in my head right now. But yeah, I would not disregard this wick if it looks to go down into it, which I do not want to see, like whatsoever. I don't want to see it go into there. It may do it, right? Because the end of the year, it may not look to continue to want to run through all this. But we'll obviously have to wait and see, right? But definitely you can keep that in mind. But that weekly wick, I think that weekly wick is going to be very significant. Unless this is violated, this order block here, which I think all of this is part of, yeah, this is the open. This is the open up here of the month, and the close is up here. So all of this down movement inside this candle, that's part of the wick on the monthly chart. Maybe even up to maybe here too. This is second week, third week. So yeah, I think it's from here down is the wick. So you don't even really got to look at that, because all of this creates that monthly wick. So you could just simply, I mean, you could map it out, keep it there, maybe write it down so you don't have to keep it on your chart. But it has this on this time frame that it needs to also be respecting before it even tries to dig into any of the deeper quadrants on that monthly perspective. But yeah, we got a new candle coming out, so definitely you want to keep tabs on that. I'm personally going to keep my attention here, right? And to kind of see if we could stay above that. I don't want to see it dig too deeply, like I said. The whole intention is to see price hold in this, power 3, drop down, maybe consolidate a little bit, go into NFP, and then shoot up, possibly target some of this stuff. We'll see, right? Anything could happen with NFP. This whole thing may get upset. You know, it may look to tank and then try to take this stuff out. You never know. You know, I don't believe so, because seasonality is absolutely ridiculously bullish towards the end of the year for indices. Bearish for the DXY. So I think that's good. I mean, what we see here currently, we have a shift in market structure going into a new month, right? So I do believe that we have a pretty solid likelihood of it going up. I don't know if we'll create all-time highs by the end of the year, but I definitely do see us at least attempting to get up beyond these levels, or at least get us close to end the year. I think it's reasonable to think it will get up here. But, you know, we'll see. But yeah, this is my opinion. I'm going to keep it clean like this. These are the levels that I'm watching that are significant. And I want to see them hold if we're going to keep pushing higher. If they get violated, we have to make an adjustment, which I don't believe we're going to have to do. But if we have to do it, we'll be ready, right? So my attention is up here. So hold me to it, right? Check back in with me next week, maybe the week after that. Next week for sure we'll be able to have at least a decent amount of more information. But I'm definitely keep my eyes up here. And if I'm taking trades, I'm trading in that direction. Unless proven otherwise, right? Like by breaking down below these levels. All right, so yeah, that just about does it for the indices. And I'm going to, for Tony, look at gold. Silver is amazing. All right, we said that bullishness was going to remain. We said that was going to continue. Basically, all that we talked about pretty much unfolded, except this. Right, this market maker sell model did not, in fact, sweep these lows out. But we did get back above this daily fair value gap, and you could see how perfect that was. I believe it was SMT here with silver. Yep. So you see that beauty. It's amazing price action. What a beautiful thing. Yeah, I did say why sell it. There's no reason to because it's just going to keep ripping. All of this was what it was. It's definitely a long-term buy. There's wars, economic turmoil. There's zero. I mean, gold and silver is already manipulated and held back as it is. Like it should be way more pricey than it really is. Like it shouldn't be so cheap. I mean, it's God's money. It's money that's more ancient than anything on the planet right now. The most reliable, that'll always have value no matter what. So I mean, it's only right for them to keep going higher, especially right now with wars and the main simple fact that countries have more piles of gold purchased in the last 2.5 years than ever in history. That information alone is bullish. Short-term bearishness, yeah, because there has to be retracements and price has to offer efficient price delivery. But just that fact alone, we shouldn't even look to short whatsoever. It's just not worth it. But I think we talked about this too the other a couple week ago, when we were down in here. This here too, this was a huge change in state of delivery, right? We already changed the state of delivery again here. All this was to reach down into here. I remember talking about this too. All it did was reach down to the gap, and that was just a retracement. We're going to keep going higher. We got above this candle. You see this black candle here? Closed above that 50%. You see the wick here? How price is respecting that? And we got a change in state of delivery from a PD array after it took stops in here. That's highly bullish. Now, unless this low was to be violated, which would have created one order block and then a second order block being violated, long term, that would have changed it to go deeper a little bit. But there's big zero reasons for any of that to be taking place. You know, but we could be deceived with these time frames, these higher time frames, lower time frames. We could be really deceived, thinking, oh, it can't possibly keep going higher, right? Or it can't possibly keep going lower, right? Who's to say that? Us? I can't say that. ICT can't say that it can't possibly do this or do that, because it absolutely can. They could have one candle that shoots up to $100,000 in 5 seconds if they chose to do so. They might not do it because it'll probably wreck people, too much so that it'll push people out. But it's possible. You know, anything's possible. But right now, just for future, anyone that's trading gold, I know I have a couple of you guys that trade gold. I would not short this market. Look for market maker buy model scenarios. If you do look to short, make sure it's very, very low time frame. You're looking for such a small amount, because at any moment, think about it like this. If war breaks out even more and bombs start to drop and World War III was to kick in, what is the first asset that will just instantaneously overnight go parabolic or continue being parabolic? Precious metals. Because that's the safe haven. You know, uncertainty leads to bullish commodities, especially gold and silver. Right? So because that's the sentiment, there's no seasonal influence, there's no overall sentiment telling us that this is going to drop. This had to happen. This was just a higher time frame correction, because I mean it's only right that they do a correction. It's just been parabolic, like nonstop, right? And mind you, all throughout this, since August, since a year and a half ago, since the Ukraine war, actually, China, Russia, all these countries are mass purchasing gold. So they're buying it up. You know, so what's going to happen? Price it keeps appreciating because the supply is declining. You know, when someone's buying stuff, supply is declining. Supply and demand factors and wars and, you know, just overall like economic issues and whatnot, uncertainty, All those things mixed together is a perfect storm for gold and silver to do exactly what it's doing. And that is go parabolic. Right? So any shorts are short-term in nature. But yeah, hopefully you didn't hurt yourself too badly, Tony. Hopefully you should. Oh, I wish you would have hit me up on social media and told me, because I would have told you flat out like this, like, yo, this is a bull right in front of you. Do you want to hold the red carpet thing and let him run you over? Or you just want to catch that wave, the blue wave, right? The blue, beautiful wave. Just, we don't want to have the red flag next to the bull. I keep telling mysteries. What kind of mysteries? Mysteries. Yeah. No mysteries. Damn it. No conspiracies. The biggest conspiracy is what ICT teaches, and we want to stick to exactly those conspiracies, because a lot of them are not conspiracies. They're coming true. All right, Fritz. Yeah, I guess I'll probably call it a day too. I think India is also a country that's also buying up tremendous amounts of gold. Tremendous. China, Russia, I pray to God that America is too. Because why would we not? Why would we let our enemies buy a bunch of gold and silver and we're not? That'd be shameful if I find that out. I'm going to do some research on that actually when I get off. I got to see what's happening, because I think we may get outpaced with gold reserves, and that is absolutely pathetic if that's happening. Even with Trump, I'd be pissed off if he's allowing that type of stuff to take place. So hopefully not. Hopefully not. Right? But yeah, hopefully you guys got value from today. Let me know if you guys have any questions. I'm always excited to see your guys' updates. Those of you that just start off with me, those of you that have been with me for a long time, how your journey started to where it's at. I love to get those updates. It's very helpful to let me know that I'm actually doing a good job. Another way you can tell me that I'm doing a good job is to like the video, subscribe to the channel, hop on as much as you can, spread the word if you have any friends that are traders that you think can benefit from a community like this that keeps it real, that just tells you like it is, that proves that they're consistent, that calls the market, putting their neck out all the time. Like I put my neck out every single week. And if I didn't know what the hell I was doing, I'd be falling on my face repeatedly, day after day after day. But the beauty in everything, the beauty in this community is, the truth of the matter, that's not happening. Right? It's going the other way. Parabolic. And I hope to get all of your guys' progress to be that way as well, parabolic, and clarity, right? And once you get clarity, the rest of it seems a whole lot more manageable. So hopefully I did a good job today explaining all this stuff. Hopefully you guys are feeling prepared for the week. Again, we'll be live here on YouTube again on Tuesday. Those of you in my private group, we'll be live again every day. I have a couple of you guys I have to talk to today. And again, if you guys are just trying to join my private group, the one-on-ones are not available in terms of that capacity, but you can always join in the lower tier and be part of the private group live calls. There's no live recorded sessions that you get to have an archive of, and there's no one-on-ones. And there's some other resources that are specifically to the one-on-one students as well. But for the most part, if you get value from this type of setting, you can imagine the value you can get from being live with me and the group, not just me, with a group of people that are really good traders, not just one, multiple, like almost 20 that are very, very knowledgeable, that have learned from me, that have put a lot of effort into learning from ICT. And it's just a community that continues to grow and help each other and be there for each other and hold each other accountable. You broke your rules, you're going to hear it from the group. Why did you break your rules, bro? We're literally talking about it constantly. How much more do I got to say? Right? Like, How much more does everybody have to remind each other? Like that's the type of accountability in a positive way. Like, you're not going to be attacked, but we've built this accountability ecosystem like within the community. So again, that's always an option for those of you that do like these live calls and do want to be on with me a little bit more. And then starting next quarter, depending on how things go with my one-on-one students, where they're at, I will most likely open up for another 10 students for the 2026 second quarter of the year. And then the third quarter and then the fourth quarter will happen as well. And I hopefully can get at least 40 people funded, and the ones that are funded, hopefully I can get them to accomplish some of their lower edge goals, and get them the confidence so that they can march on their own to accomplish those bigger goals, because I'm not responsible for that. I want you to feel and know that you are responsible for your success. It's not going to be me. Okay, I'm just a conduit, like ICT says. ICT is a conduit for the information. I'm trying to be an extra conduit for those that may not fully connect sometimes with what ICT says, But I'm just here to try to amplify what's being said instead of teaching as if I've created something new. I do have my own system. I trade ICT concepts the way I trade them. But it's all tools that he teaches. And I have my own wisdom, my own experience that I've learned a lot of stuff from. And I feel it's very helpful, and a lot of you guys also agree with me and reaffirm that. So again, thank you guys for your time. I won't keep you much longer. Appreciate the patience. God bless each and every one of you. Beautiful people. And I will see you guys here on YouTube on Tuesday. And those of you in my private group, y'all know the vibes. 7 days a week next week for the remainder of the year. And I mean, just to be continued for how long that's going to go. It's going to go as long as I'm alive, So yeah. All right, you guys. I will talk to you guys on the next one.